Hey guys, and welcome to another episode here in my YouTube channel. Today, we will be talking about how can we improve the chances of getting approved on a loan. So there is a method to the madness, and here's what I'm about to share with you. We are about to go ahead and embark in a journey where we can share with you some of the tips that we, through efunding experts, use so that we can best suit and get you access to the money that you're looking for. As many of you guys may know, we provide access to funding for entrepreneurs all over the world. Not really. Only United States. All over the world is really just more towards our events that we do in seminars. But to start here in the US, there are a couple of tips. So I have 7 tips for you guys that will definitely help you improve your chances to getting access to funding. The first tip that we want to go over is basically making a good impression. There are so many times where clients have come to us wanting to get access to $30,000 as much as $1 million or more. But usually that's about the average, right? And because of that, we get people that are very demanding. We get individuals that are very nice to work with. But at the same time, we also get individuals that are maybe perhaps they're stressed because of any situation that they may be going through. See, the first thing that we want to do is we want to make a first good impression, not just with us, but with the lenders. When it comes to anyone that's looking for funding, you definitely want to be on the good side of whoever has the money. And so one of the first things that you want to do is you want to make sure that you have all your ducks in a row. You want to make sure that you have your goals aligned, that you know exactly what you're talking about when it comes to your business, but also making sure that you are prepared, that you are professional, and that you have basically a clear, articulate way to describe your business. Because if you don't know how to describe your business and somebody has to guess what you do, then the chances of you getting access to funding are not very good. Second tip is demonstrate financial stability. See, one of the things, especially with startups, they may not have the money right now, but the thing is that you still have access to money, whether it be through your job, through your assets, maybe perhaps you have some sort of collateral, and you have to be able to show that, because just because you are starting, it doesn't mean that you don't have any responsibility that you can possibly show to the lender or to anyone that's looking to give you money that may have them or give them a little bit more confidence in giving you access to money, right? If you're looking for $500,000 or maybe a small amount like $30,000, well, again, you may not have the money and the business is still not up. So you may be wondering, well, how am I supposed to show financial stability? Well, you do have a way of making a living, right? I mean, somehow you must be surviving, whether it be through a job or maybe your business, a different type of business. So anything that can show that you can make your monthly payments, we want to go ahead and see that. The lenders want to see that. They just want to make sure that if they're giving you access to money, that you can go ahead and make their payments, right? The other thing too is financial stability. You can also leverage your credit, by the way. So it doesn't just mean money coming in. We can also, and lenders can also do this through credit. The credit also can be a sort of financial stability because your credit shows that you have been responsible for a certain number of years. The third option, or the third tip, is basically having a clear plan on how you're going to use the money, right? So this is where there's a fine line between what you can say and what you shouldn't say. Because what happens is the lender's job is to figure out how risky are you. And depending on the level of risk, that's going to determine whether they give you the money or not. And here's the thing. Sometimes too much information is not good, because there's been many times where lenders will reject a client just simply because the client gave them too much information. And giving them too much information about what you're going to use with the money, how is it going to work? I had an accident in the family things of that nature, the lender does not need to know, because the lender is going to figure out that maybe you're too much of a risk, whether it be on the business side or even on the personal side. Anything that the lender asks, just give them what they ask for, but don't go ahead and give them too much information that they're not asking, because that may also tip the tipping point towards the lender and they may not give you the money. Fourth tip is show them that you can repay the loan. As I mentioned to you before, it doesn't matter whether you're a startup or whether you're an existing business. Either way, the lender just wants to know that you can make the payment. Here's the thing. If you're not able to make the payment right now because you need to acquire the money in order for you to go ahead and start making the payment, sometimes it is very important to consider that. And so you may want to request a bigger loan because you may be able to make the payments with the same loan as well. Does that make sense? One of the ways that you can go ahead and go around the whole can I show that I'm making enough money is through your credit. If you have a high enough credit, then the lenders will consider that and will say, hey, at least this gentleman or this girl is responsible enough to make the payments, because we do show a credit history of 13 years back showing that she's never been late. So take care of your credit, guys. That's super important. Now, the fifth tip is offer collateral. Collateral is always a great way for you to go ahead and get that application going, because if you have a little bit of collateral, whether it's your house, maybe perhaps some savings account on your retirement account or whatnot, all of that can be useful. But you want to consider something. It is collateral, and God forbid something happens, you may end up having to give that up. Personally, on my end, I always leave that till the end. I don't recommend using collateral unless there's no other option. Some of the higher loans may require collateral, but also there are so many different options that don't require collateral. Term loans, lines of credit, business credit lines, those don't require collateral usually, but they typically don't require collateral. Now, the sixth tip is going to be how to be realistic about your borrowing needs, right? So you want to make sure that you're only borrowing what you need plus a little bit extra if you need the payments. Because what happens is that depending on what type of loan you're looking for, you still have to pay that back. So one of the things that I always say is it is always based on doing your due diligence. For real estate investment deals, it's not always a gray area where you may need the money for 1 month. Maybe perhaps you need it for 6 months. Maybe you need it for the full 30 years. Who knows? It's all based on the deal, right? So you want to be realistic. You want to go ahead and not think that you're only going to need this money for 6 months. You want to plan ahead. Maybe you need it for a year. Maybe you need it for 2 years. Either way, figure out the loan terms. Some loans do come with a prepayment penalty. Others do not. So if they don't come with a prepayment penalty, go ahead and figure out, okay, maybe I need this for 6 months, but guess what? If I can pay it sooner, it's going to be great, because I don't necessarily need the money right away for me to start paying it off. I know I'm going to make it back, but I don't need to make the money to pay it off right away. I can take my time because I have those payments in the loan. So we actually have from experience, I'm just sharing you from experience, that we have several loans that we do include those payments into the loan itself. So if you're looking for, like, say $1 million, right, 1.2 million, sometimes we will actually put those payments from 1 year and enroll them back into the loan so that you don't have to necessarily pay for a year. Now, here's the thing. You're still paying interest on that one particular year's worth. So you have to still do your due diligence, because you want to make sure that it still makes sense for you. Do your numbers. If it makes sense, great. If it doesn't, you can always say, you know what, I appreciate the fact that you're enrolling the payments into the loan, but I'm just going to go ahead the payments slowly 1 month at a time, because maybe perhaps you'll pay off the loan in less than a year. Who knows? Again, you want to go ahead and make sure that you're realistic, that you do your due diligence, you do your homework, and you figure out exactly how much money do I really need, and then just give yourself a little bit of a cushion, because you never know. The seventh tip is really ask questions. Don't be scared to asking questions to the lender, to anyone that you're working with. And one thing that I've learned from my mentor is that if you don't have the answer to that question, you can always pick up the phone and call someone that does. And that's the one thing that we have here and that we've personally learned from our mentors, is that you want to ask questions and that you want to have also a Rolodex of experts around you that does have the answers to your questions. And that's something that you want to do. You want to ask questions. If you don't have the answer to it, don't be scared to asking the lender, maybe perhaps the underwriter, maybe perhaps the broker, or anyone that you're working with on that loan. Ask questions, because you will not only learn, but you will also avoid a big mistake that can possibly cost you thousands, or in certain occasions, millions of dollars. But you definitely want to ask questions. And that's really that's the most important tip in my opinion, because that's where you learn, but that's also where you avoid mistakes. If these tips have helped you guys, definitely go ahead and leave a comment below. I'm super excited to doing more of these videos, and we are really excited to sharing a lot of our experience and seeing how we can provide value to you. If you like this video, go ahead and click the thumbs up and go ahead and subscribe, as well as go ahead and leave a comment, and we will talk to you soon. Again, my name is Jose Baeza.